Hey guys, how's your day?
Hello, good. Thank you, Scott. Hello, Andy.
Hello, Steve. Hi, Scott. Hi, everybody out there.
All right, pleasantries out of the way. Good, good. So welcome to another week. Boy, they fly by. Trade of the Week webinar, part of our afternoon webinar series. Like Andy said, hello. He'll be joining me in the questions box and attend to any questions if needed. But let's get going. For those of you who attend every week, you know what I'm about to say. But for those that don't, just a reminder, we are a software as a service subscription company. We're not registered investment advisors. We're not brokers. We don't manage money. We're not allowed to. But we're allowed to state our opinion every now and then, and what you got to do is not take our opinion and construe it as any sort of financial advice tailored towards you. These are just our opinions here. So we got that out of the way. Reminder that it's a 14-year-old product here at Trade Ideas. There's many levels of understanding, and it's a learning curve that really doesn't take place in a few days. It's going to take a couple weeks, and so we really like to get people as acquainted as possible and up to speed as possible, because we recognize it is a extremely in-depth program, and everybody uses it in their own way. So understanding that, we have a pretty good concierge type of attitude here. Primarily the live trading room, which is Barry Anderson's baby, about 500 people every day in there, and it's free, watching the markets in real time, a handful of good traders kind of taking the lead, and Barry answering questions, excuse me, answering questions whether you're a user or not, kicking the tires. He's very, very generous with his time. So don't feel bad about coming in there and asking questions, because Barry will definitely help you out and show you and demonstrate. And that's live, bell to bell, Monday through Friday. But in addition to that, we have some other ideas to help you out. Oops, excuse me. Hit the cough button there. During the afternoons, we have our afternoon webinars. I helped Jamie yesterday. Tomorrow you'll hear from Brad and Dan. Today is the Trade of the Week theme. Thursday, Andy has some thoughts of what's happening on that day. And then Friday support sessions. We don't have any prepared webinars, and we don't have any other classes. All we have on Fridays is a 3-hour open, come up, pull up a chair support type of session, like we're doing right now, using the GoToWebinar interface, asking questions and demonstrating live. So if you haven't been there, again, you don't need to be a subscriber. Just come on in and ask questions, and we'll do our best to try and help you. And then lastly, down at the bottom, it says TI University. Just a quick slide on that. We've got 4 classes that recur and start over every Monday in a live format. We also have a recorded playlist of the same content, but we're there live Monday through Thursday, and we start over each Monday. And by the time we get to Thursday, we're doing some in-depth stuff, like back testing and optimizing the back testing in a manual fashion. Pretty cool stuff. Sean starts it on Monday with the basics. So if you haven't attended that, it's a good way to get up to speed. And that brings us past the disclaimers and into the theme, man and machine combined. That's what I like to continue to remind people, that Trade Ideas is a very sophisticated platform that we could call a machine, and no man is better than a machine. But however, no machine is better than a human being with a machine together. So it's the reminder that it is a dual process. It's not just using a machine to turn our back on it. Again, the world we're going to walk into here in many different industries is going to be using AI to curate big data and put that curated list in front of an individual, in front of a human being. And that human being is going to use their discretionary human powers to move forward in the decision process. And it's a very efficient way of doing things compared to how we've been doing them in the past. And that's all we're really doing here at Trade Ideas, whether it's the custom scans that you build yourself or using the AI. We're using technology to build a curated list to focus on. And that list of focus is obviously going to be a good list for whatever reason, whether you like it or whether the AI likes it because of its probabilities. But that's the world in which we're stepping into. So just a common reminder each week on man and machine working together. When we talk a lot about the brokerage plus and automated trading that's taking place now with AI, people are taking it slow, but a lot of people are heeding our advice and agreeing that it's a gray box type of a tool. It's not something to just plug in and go to work and go play golf on. You don't want to turn your back on the AI and auto trading. You want to let the AI get you into decent trades, and then you as the human being discretionarily manage your way out of them. So a good segue into today. Let's see what we're going to talk about. All right, we're going to talk a little bit about the market recap, slow slog to all-time highs, as I've been calling about it. Andy will talk about Holly. Trade of the week this week did, in fact, trigger today. Applied Materials, AMAT. We'll talk about the ideas that came about with that. I'm going to kind of stay in the same theme and the same format that we've been doing the last few weeks here. Take a look at the sectors and try and identify a couple handful, maybe 2 or 3 to really keep an eye on tomorrow, ones that look poised, according to what Andy and I eyeballs look like. And then we'll take a look at last week's alerts, which I don't think were that bad. And I've got a few more we can set for this week going forward. So we'll stay with kind of the format that we have been in for the last few weeks. All right, so let me grab my pen. Let me open up here to the S&P spiders, which we'll always start with. A lot of the same, pretty much not much different, but a lot of the same commentary that I had yesterday in Jamie's webinar. You know, the golden, the death cross here, giving us a horrible downtrend, down whoosh, and then the golden cross as we recover. And again, these 2 points are very significant as big money managers will look at those levels. But when we zoom out, you know, this big whoosh that we had down here, and again, a day and a half only in bear market territory, 20% off the top. In the scheme of things, that's what the market really needed. We can really see how we need these things from time to time. Very deep pullback to reset everything. And then as it worked out, a nice slog higher. Very small pullback here. You know, bird bath there, could have been a nicer one, very little bit of congestion here, but still nonetheless enough to move the price action higher. But now in the last 2 weeks, we're just kind of looking at low volume. You know, here's our average volume line. We're trading below that for 2 weeks straight. Really the foregone conclusion is that we are close enough to all-time highs back here from September last year, that we're going to knock on the door and say hi. It's just a matter of, are we going to maybe do some sort of a little jitterbug move and pull back? Again, there's a really nice gap that could be filled back here. Even if we pulled back to that gap, that would still constitute a higher low and keep this little minor trend that we've got going intact. Because if we just kind of grease up to this thing like we've been doing the last couple of days, you know, by the time we get there and kiss it, I don't know how much energy is going to be left in the tank. You know, it's the same old thing. You're going to need to have a little bit of dry powder for when you do reach that target. And in this case, the target, I think it's a foregone conclusion. But I would like, you know, as a bull, I would like to see the price pull back, bring the battering ram back a little bit, you know, give the troops a fresh meal, a shower, and some vigor to push through and possibly move higher. But there is definitely going to be some something said here. For people who maybe want to take some profits, they're going to line up in droves at these lines. The other thing of interest, and Andy, I just laughed about it because that's really all you can do, is, you know, again, the low volume, small range days, just a bunch of little half dojis and spinning tops. And for the most part, these kind of days are frustrating here when you got red candles, you know, but the actual price actually closed higher. Moving higher on red candle, low volume is just okay. I mean, price is price, but it's not really the way we'd like to see it. I'd like to see some bigger days in here, but it's just a low volume gap up typically, and then just kind of throw your arms around. And a matter of fact, I don't know, Andy, was there news today that made the price action do what it did today here?
Oh, at the end, at the close there?
Yeah.
I did not see it. I kind of looked real quick, but I didn't see anything. Yeah.
So it's my contention that, you know, we spent all day on our gap up and all day kind of above the median line. We had to, at some point today, we were running out of time. We had to throw an elbow to the downside, right? Just almost, maybe it's just, who knows? I'm being kind of half joking here. No, it wouldn't have been Netflix earnings, Michael. This was during the market, unless Netflix came out prior to the close, and I don't think they did. But my point was, I think this was just typical price action. It's what we've been doing. We gap up, throw an elbow to the downside, throw an elbow back to the upside, and close somewhere near the midpoint. And it's just really yucky action, for lack of a better word. You know, the swing traders are forced to hold up overnight and hope they get the gap up. Day traders are not getting much price action during the day. Okay, so Michael said, I had a feeling it was usually that kind of price action is something. So the president tweeted something about a Fed member. So it gave the market the opportunity to throw that left elbow to the downside, and then obviously, look, price action recovered, came right back to where it started. really tricky action, guys. Low volume, creep higher. I call it a slog. But ideally, I'd like to see some sort of a little volatility before we get up to these levels, because I really feel like it is a foregone conclusion. We are going to test these levels. So let's move on to the NASDAQ. The NASDAQ is even closer to these levels. Goes in, getting really close, especially after today. And, you know,
sure we'll gap up to it tomorrow.
Yeah, you kind of don't really, it's not really surprising. I mean, yeah, that gap up is way back here, but look at the sideways action, really nice. What forced the hand? The 10-period moving average. So even put a breather in. But, I mean,
look at all those dojis, my lord.
Oh, my God. 1, 2, 3, 4, 5, 6, 7, 8 out of 9, 10, 11, 12, 13, 14, 15, you know, 8 out of 14 days.
Yeah.
This is not healthy, guys. This is just a market waiting for a catalyst, honestly, is what it is. It's got no more sellers in it. There's no fear in the market. It's just drifting higher, like Andy's balloon on the top of a mountain theory. Go to the top of the balloon where the air is thinner and just let it go. It's got really nowhere to go but drift higher. But again, NASDAQ is going to run right smack into its respective all-time high, and it might even do it tomorrow. We're coming up on that level, guys. It's getting interesting. The Dow, its all-time high is a bit higher, not quite as strong as the technology space, but I've noticed yesterday that Dow's been doing it in a different fashion, and I kind of like it. It's not a bad little cup and handle there. That is healthy. The Dow is showing the rest of the market how it's done. And again, I'll put the spiders back up just to show you. And just kind of lurching out again on that tree branch on low volume, and all the gaps, all the majority of the movement seems to be overnight. That is. And then lastly, the IWM, you know, at least it's fought its way through the 200-day Serengeti watering hole here, and it's trying to hopefully regroup itself, and it looks poised. You know, I don't know what else to say. The IWM definitely looks poised for a possible move up, higher up out of that that little range there. And then respectively, it's way below. It's got a lot of work to do to get back. So again, NASDAQ's probably going to kiss that line tomorrow. IWM's bringing up the rear, looks healthy. Dow looks like it has a healthy base that it's building. It's just that damn S&P creeping higher on these stupid dojis every night. Ideally, for the third time I'll say it, I'd love for a little bit of a pullback and then an assault. We'll see what we get. But there's no bear case to be made here, guys. Let me just make sure there's no confusion. I don't even really see a bear case. Apple, I always like to look at that as the fifth ETF as kind of a proxy. Look at here. Once again, the 10-period moving average doing its job, holding the price the last 3 days, including today. Nice sideways action. Wouldn't be surprised to see Apple maybe even come up out of this range as well. So that's it for the moment. We'll look at sectors a little later, but that's what I'm seeing here in the big four. There's no bear case to be made. We're going to test recent highs, all-time highs. It's just a matter of how and when, in my opinion. What do you think? Anything you want to add?
Just one thing. Zoom it back in on those spies, and it's obviously adding to what you've already talked about. But if you really look going back 3 weeks in the spies, we've had more red candles than green candles. So we're actually moving higher on more red candles. That means the intraday trading is, yeah, Steve's kind of marking them there for you. And yeah, and really there's more red than green, which is, it's just odd. And I think it speaks a lot for why Holly has really been struggling the last 3 weeks. I mean, we know there's some changes, and the changes are in the works, but it's really difficult. And yeah, I just want to add that, and then I'll take over the screen real quick and talk about Holly if it's time for that, I believe.
Sure.
All right. Which I'm not going to speak a lot. There's not a lot to talk about. It was not a good day. I mean, you can see that seldom do we ever not have one segment in the green, but today all 3 segments were in the red. Only down, you know, not down big by any means, but just couldn't get anything going. And once again, what does Holly have to work with? Remember, guys, we always talk about big gap ups are tough. You know, especially if it's above 0.5%, which today I think it was close, but you know, you had your open and basically just pulled back until buyers would step in, kind of prop it up, and then later, yeah, it's just kind of a mess. Holly trying the short side, trying the long side. You can see the risk on and risk off profits here. Just kind of just spinning her wheels, really can't get anything going. But guys, once again, you know, you have to learn from this. And gap up, you just have to be a little bit nervous because a lot of the move is done overnight and throws a lot of the strategies off. You don't, you can see Holly 2.0 and Holly Grail barely had any trade count at all. 2 in Holly Grail, 3 in Holly 2.0. And those were really ugly. Actually, 2 stop outs here and 2 stop outs there. So nothing to write home about in those 2. But guys, I'm not making excuses once again for Holly, but you have to learn. And anytime you do get these gap ups we're getting, and just not going anywhere like we've done for basically 3 weeks now, intraday, maybe a couple of days where we moved higher, but for the most part, just kind of churning sideways each day, and that's what we're getting. It's been tough on any strategy, including Holly. So. That's when it's man and machine, where the man should common sense should back away and said, okay, maybe I'm going to give Holly a breather, maybe take only trades where that makes sense, maybe like Cree today, semis. Steve will go over the semi sector that nice volume, relative volume, 1.5. No resistance really anywhere to be seen except if you stroll back. I guess I'm looking at the lifetime down here. I see it's nowhere near the lifetime, but definitely, over the last 2.5 years, just breaking out and doing it on good volume, something like that. This is where you see something that just doesn't look good, you just pass on it. I wouldn't be, obviously in this environment, I would not be auto trading Holly unless I was paper trading. Wait till she gets back on track. It's just a market over the last 3 weeks where it's been tough. Track record all time still very strong, but the last 3 weeks of it's been a tough go at it. All right, Steve, that's about all I need to say about Holly today.
Yep, not much to say today. All right, so I'll take the screen back. Let's see where we are here. Great. All right, so the trade of the week. By the way, before we get to the trade of the week this week, which is working, knock on wood for the most part, last week was interesting. We had the price come back up, stop us out, come back and re-trigger again the actual breakout price, and then pull back. And look at how unusual that was compared, when you look at the typical average true range of these candles here, all of a sudden the last 3 weeks, it's like somebody plucked the damn rubber band, and jeez. Hard to handicap that, but the good news is that one is behind us. And this week we focused on not so much a specific scan, because it was kind of hard to find some stuff, honestly. And I think it goes back true to what Andy was just talking about. And SPY was just reaching higher, slogging higher. There's just a lot of stuff that's not really set up or coiled or scrunched. I mean, I found a few things we'll save before the end, but if we go into the weekend here, let me expand this, and we'll, that was yesterday, perfect. So this is what the chart going into the weekend of AMAT looked like. Let's look at the chart of the SMHs going into the weekend. This is what they looked like. You saw me drawing earlier on stuff that looks great going sideways, and then that moving average comes and catches it, and boom. So Friday we closed the week with a really nice breakout in the semis, and so that was kind of our focal point to start with. We had a few scans where we looked at some things, but for the most part, this last week was kind of discretionary, quite honestly. So with the backdrop of the semiconductors, great candle there today as I zoom back in, kind of looked around at a few names, and the one that really stood out to me was this one. And quite honestly, you look at this area right here, that's chart porn, for lack of a better term. I mean, look at these moving averages: the 10 above the 20, 20 above the 50, 50 above the 200. That right there, this look going into the weekend looks nothing like charts when we're like back here and say, hey, what do you think of this chart? I see a bunch of twisted moving averages and a price in the range that it's been in for the last 20 days. But it looks nothing like what our chart in AMAT looks like now, breaking out of this range. Beautiful fanning out of the moving averages with the momentum line obviously proving the last week the bounces and support are there. So couldn't say no to this chart. I'll zoom back in here for the moment, and it was just kind of a simple spot. Put the high above this last high back here, which was a few cents above the Friday high, and let the moving averages help push this thing higher. Again, it's breaking out of a nice range. You know, there were some other semiconductor companies that were 3 or 4 days green, and we always talk about not chasing the herd. We don't want to chase the herd. We're looking for stuff that's setting up. So AMAT was without a doubt setting up, again, with SMHs as the backdrop. So as we move forward, here was yesterday, no trigger yesterday, but what was an important piece of information that was given to us is at the lower end of this little doji, which of course we are seeing in so many stock charts lately because of the backdrop of the market. But with the information that we got was that the moving average 10-period SMA is still intact, kicked the price back up above. And yes, and then today we had a nice open with some pretty good relative volume too. I can't remember how it finished the day. Finished the day at 1.42, but at one point this morning in the first 15 minutes, AMAT was doing 3 or 4 times normal volume, which was pretty good for the open. And so looking at the intraday, obviously it got caught in that little downdraft of the bigger picture, but it held up for the most part. Most importantly, it held above the moving average. Nice volume spike here as well. Would have liked to have seen it close a little higher, but again, when we type in the backdrop of the market, this end of day mess here, you know, didn't really help any stock out there, in my opinion. But trying to think of what else. That's pretty much it. So let's look at where we go from here. Now, the target, actually, if we zoom out a little bit, the target is up here. We have a gap to fill right around 47. So if things continue to move higher, there is your target. Again, looking at this area right here. Whoops, looking at this area right here. The downside, being a tight stop last week using the 10-period SMA. You know, this was a pretty tight range between the breakout and the rising 10-period. It was only really 60 cents there. So we're using this time the red, bringing up the rear, the red 20-day SMA as a backstop. And as I mentioned many times when I talk about these moving averages, it can be, yesterday was a perfect example. Down here on the lows of the day yesterday, there's the low candle right there. It tagged that rising 10-period SMA. That is not the reason to get out because it comes and touches at midday. The reason to get out is if it touches it and then bleeds through it and at the end of the day closes below a moving average. So I don't really want to see a close below the 20. I mean, if you're somebody who likes to keep your risk and management tight, by all means, use the rising 10-period moving average. But if you want to give it a little bit more wiggle room, as last week's Trade of the Week identified us, you got to be able to withstand a few elbows back and forth in this crazy environment. You can downsize your share position size to withstand a bit more of a wider stop. And again, the price action needs to close below this 20-period moving average, and that's what I would consider the down. When you reward, there is our, let's see, there's our downside risk. Here's our current price. And there's our upside reward. So the upside reward target zone is bigger and fatter and wider than the downside risk reward visual there. Anything you want to add to this trade of the week, Mr. Andy?
No, I thought it was a great call. Hopefully, yeah, we get some follow through. It's been hard to get follow through in the market, but in certain stocks, I should say, not the market. It just grinds higher. But a lot of times they pass the baton. But no, I like it, especially if you can get above. What's that high going back over there to that middle of August? Yeah, close to it.
44.82. 44.82.
Yeah, if we can get it back above that area, man, it's a good chance we go for that gap.
That becomes what they call the Hoover, the vacuum cleaner trade. It's just kind of a sucking sound that pulls the price up into this gap. Could happen. I've got a few stocks later this afternoon, or later this webinar I'm gonna give out. But as I was looking through stocks in the semiconductor on Friday, one of them wasn't quite ready. It was kind of funny. Let me try this again. Here we go. Micron wasn't quite looking the part on Friday. Come on now. There it is. Had a big old red candle. And I thought, well, it's kind of sloppy, but if this thing continues to grind out into its wedge, and that's what it's doing, a nice downside wick yesterday and back up, this is an eye on. So we're gonna mark this one up at the end of the day, but you could see this might be also a semiconductor lagger. It wasn't quite set up nicely enough to look for trade of the week, as again AMAT was looking looked just like this going into the weekend. So poised above, again, chart porn right there. Moving average is all fanned out, breaking out of its respective sideways range. All right, so go semiconductors, right? Hopefully they keep pushing higher. So I'm going to kind of stay with the format. So there's a trade of the week. We might finish a little bit early this afternoon, and we might have a little time at the end for some charts. So if somebody wants to look at charts, hold your thought. We'll get to that. Let's go now to the sector glance like we talked about and seeing if there's anything we can identify to watch for tomorrow that might be in play and looking poised or set up for tomorrow. Let's get a good perspective here. There's our, look at that, there's our semis at the top. That's what we want to see. Nice, good looking, strong. Oh, another thing I don't ever really talk much about this, but just so you know, AMAT doesn't make chips. You know, Intel makes chips, NVIDIA makes chips. AMAT makes the materials, the big machines that Intel buys to make their new chips. So it's a capital expenditure kind of a thing. I try to stay technical in these webinars, but you know, interest rates are still relatively low. I think capital expenditures are starting to creep back up in some of these companies, and they're going to have to retool. If you're a semiconductor company, you're going to have to retool, so to speak, and that's where AMAT comes in. All right, it's actually called a semiconductor equipment maker as opposed to a chip maker, but they need each other. All right, so semi's looking strong, obviously. OIHs look pretty darn good to me. Gonna have to probably put this one on the short list, guys. If you have a lot of stocks that you know are in the oil service sector, tomorrow might be a day to keep a close eye on them. That looks pretty interesting. The banks, they're coming back from that horrible drubbing they had last week, so they're really in no man's land. Nothing to say about that. The financials, however, they're different from the banks. They're not just banks, they're other financial institutions as well. This one looks a little better, actually. Gap up and kind of a horseshoe up and out of that gap. XLF does look kind of interesting tomorrow. There's oil, you know, gas is probably going to want to go higher, unfortunately, but there's oil, the commodity. That looks like it wants to go higher, in my opinion. Brokers actually not looking that bad either. So XLF, brokers, and oil service so far, not bad. The IAI are the brokers. A nice consolidation above the 200-day moving average, and now turning and looking to move higher. Ooh, solars. There's a lot of, there's a few good setups here today for tomorrow. So far, oil, financials, brokers, and solars looking interesting. You know, same kind of thing I was showing you guys earlier. The moving averages aren't quite fanned as much as the other, but they're still above the 20 and above the 50, and that sideways action is now being courted or pushed higher slowly, ever so slowly, by that rising moving average. This is the kind of stuff I like to look for. Energy, that looks like kind of just a back and forth mess for the most part. Maybe some consolidation there. Home builders have been quietly creeping higher, but there's no real major setup other than the fact that they're super healthy. I mean, there's the fanned out moving averages creeping higher in the home builders. Retail doesn't look bad either. Really poised and core. There's a lot of sectors that might look really good tomorrow. We've looked at those. Technology, Dow, we looked at that. Steel and no man's land, IWM, we talked about that. Healthcare was looking interesting, but then I'm sorry, silver, that's my bad. Spiders, we talked about that. Agriculture, software is kind of in the technology. Gold, all the defensive stocks, gold and treasuries, you know, again, the defensive stuff is starting to fall and die off on the vine as these stock indexes creep higher. The money managers out there are, you know, trying to balance the correct portfolio weightings, and if they're selling bonds, these are going to go down. That gas looks horrible, breaking down to new lows. horrible in biotechs. Nothing happening there. Gold miners are going to be leaking as well. And then here comes healthcare. XLV. Ooh, that was ugly. So XLV looked really interesting on our last
we talked about
webinar.
it a lot, yeah.
On our last webinar, it had that look right there. But no.
But here's
sir.
the thing: we talked
Just
about that wedge. The
that.
wedge, they can break either side of that wedge, and it broke to the downside.
Okay, so to rehash, if you want to scribble it down tomorrow, I think sectors that look poised, possible move tomorrow: oil service sector, XLF financials, not the banks, but the financials. Oil commodity looks like it wants to go higher. The broker dealers want to look like they're doing something, and solar looks really interesting. A nice tight curling little wedge
What does
there.
First Solar look like? It had that big gap up the other day from Goldman Sachs. Yep, just sitting there going sideways.
Interesting. So those are your sectors of interest and of intrigue tomorrow, guys, for sure. I would keep an eye on a bit more than we usually have seen. All right, so now let's do this. We left you guys last week. We had a horrible trade of the week last week, and I don't want to say I'm sorry because I can't control what the markets do, but it did what it did. And we gave out about seven alerts, 6 longs and a short last week, and here they are. So, let's look at them here real quick, see how they did, which means they probably did okay.
Exactly.
Nice breakout of sideways action. Really good 5 or 6 days. There's 7-8% of alpha on that FTNT given out last week. OLED, a couple 3 days of breakout. Solid 3% possibly, but a higher price stock nonetheless. There's our AMAT trigger today. I'm not going to really count that because we didn't give that out last week. It's just for me to monitor. Sono did give us some alpha 3 or 4 days, and now is kind of giving some back. Interesting. And the short actually worked as well. Look at that. That was that, remember that bouncing ball example I gave you guys? Yeah. Said normally I don't like to do these types of trades, but when you see that bouncing ball, every new bounce is just less amplitude than the prior bounce. Sometimes you can get those things. I wouldn't be surprised if there's some more follow through if the market allows, but maybe one day was it. That was it. And then this one didn't do a whole lot. I think it pierced above and then kind of came below. So not a bad track record for last week. I've got a few ideas for this week, so let's go ahead. I think we're just going to go right into that. All right, I'm going to delete all these, and I actually have 7 again this week. Picking and choosing a few. The first one was complete discretionary. It's the one I mentioned. Looking at the semiconductor ETF, there's the semis, looking strong, and here's Micron, looking for a direction. Kind of feeling like the odds possibly favor a break in this wedge, and if you don't see the wedge, there it is. Kind of feeling like a break in this wedge is going to happen to the upside, so we're going to go ahead and mark this one up as our first. I'm going to use this day on Friday as our head start level, 43.21. Right click. 43.22 is our new price, and this is 100% discretionary, if I can spell. Initials. All right, the next one is from the comp list. I'll just pull them up. You can briefly see. Most of these also, by the way, may be on channel 4. Some of them might not be. The composite rating list, I only have one from this one, and it is a diode, if it's still even on there. Maybe it closed without being on there. Let's see what happened here. Oh, you know what? Maybe that wasn't off that one. DIOD. No, maybe it wasn't. I'm probably confusing myself. Yeah, 86 wouldn't have cut that. Forgot where I got that one. It might have been Squeeze Me. But nonetheless, I like the way it looks. Let's take a look at this again here, guys. A nice possible reversal of this little downtrend here with sideways action, just waiting for the moving averages to come. And look at that, starting to force the issue. So we'll take today's high, 39.44 is what we're going to mark up. Oops, I don't need to put it there. I need to put it here. And I forgot where I got this one, but nice consolidation. All right, this next one I got LASR. got this one from, I believe, the trend change. Yeah, this would be a trend change deal here. LASR. Try this again.
You're going semiconductor heavy here.
Is that right? Well, I'm just doing what's coming. I'm not trying to pick favorite. Why isn't this moving average correcting itself? I thought we fixed that. All right, whatever. Very close to breaking out today. We're just going to use the high back here. Can't even get my, let's try this again. The high back there was 24.86. Perfect, 87. Now this one probably has some short squeeze potential. Because of where it came from. Float, short float. Oh, that doesn't seem right. That value does not seem right. Occasionally we get some weird, wacky values in here. I'm not going to lean on that too hard, but nonetheless, we'll keep it. SNBR, I believe I got this one from, this one was my squeeze me trade, I thought. So this one has a short float of 26% on 29 million shares. Pretty low float for 29% of the people to be missing something here. Nice reversal candle today. Look at how it went below both moving averages and reversed and recaptured them both by the close. This is a very healthy looking candle right here from which tomorrow there could be some follow through. So we're going to mark this up. I want to get a head start on this one too. Do it right there. What's the value of that? Okay, we'll go to 20. The notes on this one will be short squeeze. What else we got? We got three more from, I haven't looked at this one in a while. Andy had created a scan called the Bull Flag scan and has some interesting daily compressions on there, and we found a few. CBP. I believe is the one. Look at that.
Yeah, how about that?
Yeah, moving averages fanned out, sideways, waiting for the averages to catch up. Not really a short float play, but just a nice chart.
China Biotech, I love it.
And there's a possible gap back there. So this thing is, we're going to call this one the $100 roll. It's so close to 100, it's set up to move to the $100. So we're going to put a high, and that'll be our note, $100 roll. 97.76. For those who don't know what I mean, $100 roll. Stocks have a funny way of, like I said earlier, when they're in the neighborhood, they're going to come and knock on the door. And sometimes when stocks are doing okay at 95 and they've never been to 100, they just seem to find a way to get up to 100 at some point.
Oh yeah.
So gravitate. H. This is interesting. We're going to finish off with two hotels here. Hyatt Hotels. Look at that. Tested yesterday the moving average. Got you. Closed back up and closed back above. That's nothing wrong with that candle at all. Matter of fact, it's nice to see it test those levels and know that buyers are lurking underneath that moving average. Even kind of a flag wedge here. So we'll go for the breakout. We'll go for the whole breakout, which should be 77 even. And then lastly, which just happened to show up here, Hyatt doesn't want to be outdone without Marriott for whatever reason. Look at that.
It got away from you.
What's that? It got away from me?
Well, a little bit.
Yeah. It could have. We're looking for some follow through, and that'll be my notes tomorrow. Follow through. Could be short lived. 134.50. We'll make sure we spell that out. 130. What? That's not right. I got the wrong value. Hold on. 135.92. Okay, so follow through from yesterday, question mark. Maybe good for 1 day, then bail. We don't want to stick around for too long. And that would be 1, 2, 3, 4, 5, 6, 7. That would be the 7 working alerts that we're going to pass out for this week. And we're definitely way ahead of schedule here with a lot of time left. So as I share these out, if somebody wants to have us look at a couple charts before we bring Scott back in, we can certainly do that. And It's always nice to have a few pair of eyes look at the same thing, and it always helps to know if you're long or short or thinking about getting in. And I'm putting in the chat window 7 price alerts. All right, those price alerts are now in the chat window, and you can receive them and put them into your cloud. And if you open the cloud link, it'll just add them to your current price alerts, and we'll all get them at the same time. Ah, the M call, yes, the Macy's. Macy's had a nice breakout, but it has given all of it back. Now, we did note earlier that retail did not look that bad, and that's where, where's retail? That's where Macy's is going to be probably looking for its cues. Here's the retail. Let's just kind of look at them both. That's what retail looks like, and there's Macy's. A little bit lagging, but still, I think this could kind of be a sloppy case of a pivot level. That was kind of the level it needed to break out of, and it's kind of returned to the crime, and now it's been fighting with that level for a few days. It's getting kind of critical here. The bulls need to step in and start to have some buying come back, to have looked back and said, yes, without a doubt, this was a nice breakout and a retest of the pivot line where resistance or support is definitely holding. So I would hope that would be the case. Let's see. Yeah, that's about all I could say. Hal, it looks okay. It's just returning to the scene of the crime. Excuse me, it needs to start digging in though these last 4 days. Congestion kind of makes sense for that level. I would have definitely liked to not see it come all the way back to the scene of the crime, but nonetheless it did. His name I haven't seen in a while, Juniper. That's probably why. Look at that chart. Not a lot to say except it recaptured the 200-day moving average. It's nothing really compelling. It's holding up okay. I wouldn't want to be short it. I could say that. I think you had another one quickly, Delphi. This one is getting caught up into its 200-day moving average. It's going to probably have a little fight here for a while. Might even see a little bit of a pullback in that DLPH. NVIDIA long-term. Is that what you typed, NVIDIA? Okay. And at $129. Must have been down here. Very nice pickup down there. You have now filled the gap for the most part, so let's take a look at that. I mean, objective number 1 has been achieved, and notice that there was a lot of congestion here and even a little bit of sell-off since then, so it makes perfect sense that people were taking some profits here, kind of like we're looking to do in the AMAT trade of the week, same thing. So I don't know what your time horizon is. Obviously, we want to see this dig in here and create, higher lows. And if it can do that for you, it's probably got a date with that 200-day in the near future. Today was a nice little recovery for sure to see some green pop back in there. Mm-hmm. Reviews, TNE. Gap fills, first thing I see, although it's mostly a wick. What I see, though, is definitely a pivot level. Top of that wick, top of that body. Got close, but not close enough. Came back down and double tested it. And that second test, for the most part, might be enough. But essentially, you're in a range here. You need to get back above that declining moving average, and you need to stay above that line, in my opinion. So whatever those lines equate, that's what I'd be watching in that particular one. All right, we'll do 1 or 2 more here. Wind is setting up at the 50. That's correct. It's coming up and tagging it from the underneath. Wyndham now. It's funny, we just looked at a couple of hotels, Marriott and Hyatt. They seem to be doing well. It's a recapture of that, very strong, and also pretty strong. So, it's, for the most part, its peers are doing okay. But technically, it's going to need to get above that 50, and it's going to need to get above and close above it, not get above, trade above, and then come back and close below. It's trying. I mean, in the bigger scheme of things, we could, look at that and then that, and definitely this might even be one to look at to say, what does it look like on the weekly chart? Nice double bottom down here. And that's it for the week. It's not been out that long, so that's the most data that we have. It's a relatively new issue. I don't think it looks bad. It doesn't look super bad at all. Let's get back to the time frame here. Daily, otherwise I start getting confused. Do you know the answer to that? The VWAP in our single stock. We only have one calculation for VWAP, and however it's calculated, it's going to show up in the description. So
yeah, it's the intraday time frame. I'm pretty
highlighting
sure.
VWAP. I'm going to help. And why is it not coming up? I thought VWAP was going to come up.
You sure you?
Huh.
Sure you highlighted VWAP?
VWAP. Help. Max VWAP equals 1. Oh, is that one of a custom formula though? That might have been it.
No. Are you talking about distance from VWAP?
Maybe that
Go
was a custom formula.
Go distance from VWAP.
I think that's what it was. Yeah.
Oh, there we go.
So the distance from VWAP, the way VWAP is calculated.
Yeah, the stock's VWAP for the day.
Ah.
Yeah.
Okay.
So there you have it right there. It's the VWAP for the day. So it's not like a VWAP for the daily time frame.
DWM, you're asking about the chart DWM? Wisdom tree. Okay, anybody else have any charts? Otherwise, we're going to wrap up and bring in Scott. Always remember the info@trade-ideas.com is a valid email to send in any question regarding scans, help, technical support, specs, accounting information. It'll be routed to the correct representative, so info@trade-ideas.com is a good place to start for all your questions. And with that said, yeah, kind of light content today, but we'll bring in Scott. I think Scott has a couple of announcements. Let's go ahead and do that. Did I close my, I think I did, didn't I?
I don't recall.
Oh, let me grab that again. Hang on, bear with me. Shit. Gotta grab my stack. Lost my stack. Bad habit. All right, Scott, whenever you're ready.
Right on, thank you. So on the way out, just a couple reminders. There's a podcast. Probably won't have a new one out on Good Friday since that's a market holiday, but we generally release on Fridays. So if you search for Trade Ideas Podcast wherever you listen to yours, you can get the subscription and check out some back issues with our guests. We had a couple of the last ones of 2018. We had some really good guests on, so you can scroll through the archives and find those to entertain yourself. We have an ebook that's really helpful. Both Steve and Andy contributed chapters. It gives you 5 strategies. There's 5 chapters, each one with a strategy on how to win in a post-BTFD market. So pop in your email at the page trade-ideas.com/ebook and get your download link. There's also a code that's good this month, April Holly, all caps, 15% off your first month or year of Trade Ideas. And for those of you on standard, you can also do that for the upgrade. Any questions, email info@trade-ideas.com. Also follow Steve on Twitter @TodayTrader. We also got @TradeIdeas, Facebook.com/TradeIdeasPros, the Facebook handle to like and share stuff with buddies. We'll have a recording up later on tonight or tomorrow and send you an email once that's ready. And the email will link you to the recording and also give you the discount code again. Thanks, Steve. Thanks, Andy. Thank you, everyone, and have a good one. Later.
See you next